Powell will be speaking twice this week when he provides congressional testimony. And this is very important because there is one chart that I am watching really closely. It is equal weight S&P 500 because it is now within $1 of getting to a new all-time high. So I think this chart is really going to tell us whether or not we are able to repeat what the Dow Jones did, which means going to a new all-time high. Let's have a quick look at that right now. So we can note here that there is no back test. It just goes higher on the first attempt. And what that means is that resistance was not really all that strong. We just powered up and went higher. On the other hand, what could happen to RSP is that we form some kind of double top where initially it looks like this is a rejection. We form our all-time high, we get a rejection, but then ultimately it's just a back test. And then we get over it after. So what does this really mean? Because you're talking a lot, but make it very easy for me to understand. Everyone says the market is not strong, but when I look at the performance for the last 30 days or the last 1 month, man, it looks like it's pretty bullish out there. Most sectors are green. A lot of individual stocks are green. And that means that if we're thinking about a different way to measure the market or equal weight, if we're going to a new all-time high, that means that the average S&P 500 stock or the 500 most elite companies in the world are at a record level. And they are joining other sectors and ETFs, which are already there. We can see that our blue sky list is growing. We got chips, tech, we got the Dow Jones, we've got the Russell, we got insurance, we got Berkshire Hathaway, we got water, we got healthcare, we got select small caps, the good ones. We got the New York Stock Exchange. We got a whole bunch of stocks. And XLF is also looking pretty close here. So I think it really comes down to RSP. And I think what'll be very important this week is that we don't tell the market what it's doing. What we want to be is receptive to the feedback we're going to get. Is Jerome Powell going to be our friend? Is he going to be our foe? Well, that's important because right now, that is going to be the most important data point for the week. He speaks on Wednesday and then again also on Thursday. So there's going to be some initial feedback from his first day of testimony, but he usually speaks in front of two panels. And I'm going to ask you for a favor. If you could please consider smashing the thumbs up and subscribing to the channel, that would be greatly appreciated. So he's going to be speaking for 2 days. It's usually in front of different committees, and we usually get a lot of questions, like hours of questions. So I want to see what happens. And then we also have the Bank of Canada and the ECB given the rate decision this week. What I want to focus on a little bit closer, though, is this number here at the bottom because, oh my goodness, if this number comes in as expected, that January effect might be happening. Why? Average hourly earnings for the month of February, month over month, are expected to go from 0.6 down to 0.2. That would be huge. Non-farm payroll, 200,000 is considered a strong print. We're pretty close to that, but it is softening. And then the unemployment rate is staying sticky. What does that mean? Strong economy. And this will be interesting because right now we note that the GDP revision from the St. Louis Fed has been bouncing around a bit. As of this morning at 10:41 Central Time, we are here at 2.12. This will be interesting because I've been talking about how we're forming higher lows and higher highs. But if we're really trying to avoid a recession, a lower number is easier to beat on the next print than having a really high number. So maybe this is good. We'll find out this week, like I mentioned. And I believe that if this number comes in as expected, we should likely see strength on these charts. So with the S&P putting in a new month, we do have new support and resistance. You can pause the video or stay tuned until the end when I review those in a little bit more detail. But what I would note is that we have not yet even had a weekly lower low. We've had it one time. So if we go back in time to the low from the last time Powell spoke, that's why this kind of matters because this guy moved the market. What happened? Well, we have one single weekly lower low, only one. And that's pretty incredible. So until we form at least one more, and again, like I'm not going to make it seem like this is a rational market where this current uptrend is sustainable. It looks like a megaphone to me. And if I go to full candles, you'll see that as we get closer to the top, it's harder to hold it, right? So we could come down anytime. And in terms of there being a larger correction, we're going to have to see this area lost. It's 504.75. And that'll be very important because we're going to lose that area before we come down and truly test the monthly chart. All right, now let's push forward with the rest of the notes. But like I mentioned, later in the show, we will come back and look at a few more. So right now, the Fed rate cut probabilities are what they're here on the screen. I encourage you to pause it. After Jerome Powell speaks, we want to watch those. I also don't really want to hear about him talking about a pivot. Why? It's traditionally a very bad thing. We go down by 35 to 50+%. hey, we're in this Goldilocks scenario where the market is currently pretty happy. And right now, I don't think we're really tracking the seasonality as much as people think. I think it really comes down to Fed policy, which normally does not happen in big moves, called the big cycle. So as we see more continued strength or higher lows and higher highs, which is what I just went through, first of all, on the weekly chart, this is where we'll get our first warning. But I would say that the mega trend that we've been talking about, specifically going here to SPX, is not broken until we form a monthly lower low. I have notes on those too, so please make sure you stay tuned. We will go through that in a moment here. So strength is good. And I tried to find the best graphic for this Newton's first law of motion. Here we go. Super simple, right? We'll talk more about this in the coming month, but an object at rest remains at rest until an unbalanced force. What does that mean? Volume, right? Price action. So when we're going sideways, and then when volume or something comes in like a catalyst, then we go higher. Oh, yes. And an object in motion will continue to stay in motion until there is an unbalanced force. So if we're seeing higher lows and higher highs, just like we did in 2020, well, this rally lasted for 11 months. That same thing could be happening here. Remember the saying, history does not repeat itself, but it often rhymes. So far, we had 2 red candles as we go to a new all-time high. Over here, we have 3. Hey, it's not exactly the same, but it's rhyming. So there you go. History does not repeat itself, but it often rhymes. So yeah, this is rhyming. And this seems like really simple. So I'm trying to think of the best way to illustrate my story. And this is no surprise because, again, if you want to follow me on Twitter, my handle is right here. I'll give it to you 1 second. It's right here, or you can click on the comment in the description or the description. Anyways, what this means is that going back to December, I said that we don't want to fight the Fed. A pause is bullish. A pivot or a cut is to be determined, but generally not good. And blue skies are bullish. So if equal weight S&P 500 joins the club and goes to new all-time highs, hey, this market looks pretty strong, right? Looks like it wants to go even higher. And the saying is chips lead mega caps, tech lead SPY. So chips lead tech, tech lead SPY. This is bullish, and we have targets of pretty high from here. So if the pattern continues, let's believe it. This is where a lot of people are saying that valuations are not in bubble territory, but they are starting to get elevated. Not for individual companies, which we ironically think is the ones that are driving the valuations boom, but it's actually the indices or the index, right? The Dow Index, S&P, NASDAQ, Russell. Historically, to where it is in the last 10 years, the Dow is now overpriced by about 10%-ish, right? Just rounding it up. S&P, two times higher, right? 19 versus 17 here. For the NASDAQ, this one's richer, right? That's about 20% higher. The Russell, it's a little bit cheaper, but the Russell has this issue of not being very profitable. That's why when we look at 2 charts, one like CAF, which is going to be the cash cows of the Russell, hey, this one's at all-time highs. Why? These are good companies. Like the S&P is the 500 most elite companies in the world. The NASDAQ 100 is the 100 most elite tech companies in the world. But the Russell overall has this issue of debt, where right now they are not at new all-time highs. Why? This is 2,000 stocks, Russell 2000. A lot of these have regional banks. A lot of them just don't have profit, which means they have a lot of debt. And these really high yields are really a thorn in their side. So right now, yields are very high. Look at the 10-year note. It's currently here at 4.14, right? Very high. So what does this mean? It's pressure. It's pressure on the, if we look here to the chart, on the 1 week, we're back to where we were back in 2022. There's not been very much relief. We've stopped going down. We can see that here. And we're actually back above our 50 MA on the weekly. And we're butting up against a level that we had back in 2022. There has been almost no relief for these small cap companies in quite some time. They're struggling. Yes, it's pretty obvious. And there's been, relentless S&P momentum leaves dip buyers with very little playbook. Whoa, right. Yeah, that's been tough. And that's because we're running on extreme greed. How much do we have left in the tank? Hey, the market can remain irrational longer than we can remain solvent. And these short sellers are pretty irrational right now. They've made exactly no change to the short position as we go to new record highs. They have 200,000 contract short, historically a pretty large position. So there's fuel, yes. There's more earnings this week, but nothing I think is really going to drive the market. We got through all the big guys so far. So that is really it for this week. At a high level, here are the key dates that will drive the market. We have what we went through before on the first slide. We got the Bank of Canada. We got the ECB. Then we have, as a second most important data point, we got payroll, unemployment, average hourly earnings. That's a really big one. Watch out for that one. And then Jerome Powell testifies for 2 days as the number one catalyst for this week. This will be important as we look forward to March 20th when we have the Fed rate decision, right? That's in a few weeks from now. And then here's your support and resistance. If you want to pause the slide, they're right here for this week. All right. Otherwise, the S&P, the Dow Jones, and the Russell are all currently overbought, and they are at risk of a sell-off. However, we're not going to get a sell-off until we at least form a weekly lower low. We're going to need a few candles to form a pattern, which means that if we form a lower low next week, we still need follow through, which means we don't just need the start of a correction. We need to actually see it. Otherwise, it's likely just going to lead to another monthly higher low, because right now we have to lose that 483 number, which is a lot lower from here. It's nearly 20 points lower. Whoa, that's like a big drop. It is a big drop. It's nearly 5%. So not saying it can't happen, but we're going to see evidence on the weekly before we get evidence on the monthly. And then finally here, what I think is so important, we'll come back to this throughout the week, but we're bullish over 511. And what I want you to think about is a very simple story. So 480 is the only number that currently matters. Why? Because blue skies are bullish, and there's going to be lots of noise. There's going to be news, economic data, earnings. Let's focus on the levels. If we remain in a monthly higher low, we remain over the 480 new all-time high. What does that mean? 483 is that number I just talked about here. So if we remain in a monthly higher low, it means that we're going to be over the previous all-time high. So until this chart breaks, we're in blue skies, which are bullish, which means we're going to go higher. And if we remain in a monthly higher low, there we go. We remain over the previous all-time high. But here's the really important one. So I talked about how the weekly chart is going to give us evidence. Again, keyword being evidence, not my feels. I feel like the market's overbought. I feel like it should go down. No, what's the evidence? Like we're a lawyer. Is our client, meaning the S&P, is it bullish or bearish? Is it guilty or innocent? Well, let's look at the evidence. So if we form a weekly lower low this week, we got to get to 504. However, I'm going to give you another cheat code or an easy number to think about. What is it? It's 511. Why? Because that is a monthly higher high, and we're currently over it. And if we remain over it, we're in a breakout. However, if we now fall back below 511, ideally on at least a weekly candle close, that will be a failed breakout. So that'll be the first warning before we get down to that 504 and before we get down to that 483. So we've built ourselves a nice staircase of support as we've gone higher. Now the question is, when we eventually form our back test, which we've been looking at for some time, we want to know what levels to watch. Until then, continued strength is bullish. Objects in motion stay in motion. Thank you very much for tuning in. I look forward to seeing you on Monday morning for the stream.